JB here. Hope everyone's doing outstanding. July 29th, 3:28 p.m. on this fine afternoon. Talk really quick about the market. Some names I'm looking at go from there. S&P down about uh, almost 0.3%. Another bumpy session, tight range, kind of lackluster here in the afternoon. But similar to yesterday, right? Markets open and just kind of slowly melted to the downside. And then the last 30 minutes saw nice buys come through, and the S&P closed higher for the sixth session in a row. So if you look at the headlines or you wake up the next day or the afternoon, you say, oh wow, green again, but it didn't feel like a green day. And you kind of have a similar setup here today. And I don't know. We'll see. I keep. I mean, for the last couple of weeks, I've been saying, obviously, the higher we go, the probability of some kind of pull increases. Whether that's at 6:35 here, or whether that's at 6:40. Uh, I don't know. But today's the first day. I can't remember the last time I got puts. I mean, I think I got SQQQ calls a couple weeks ago. But outside of that, since April, haven't got puts. And I'm not saying that means we go down. I'm not naive enough to think, hey, I'm going to time the top or what have you. But it just feels I don't know that the probabilities are much higher this week than last week. I mean, of course, it's easy to say that with all the events we have, right? So tomorrow we have GDP data, which you would have to think is probably 2.5 to 3% to the upside. You would hope or think. Then the Fed meeting Fed statement. Powell can spin that dovish without coming overly dovish, but people worry about that he's getting impacted from the pressure from POTUS. I think that'll bode well. And then we have to start looking at some of the other data. So then we get well, earnings. Obviously, you have Microsoft and Meta after the close, Amazon and Apple the following day, PCE data, and then jobs report on Friday. So it's just a lot of stuff here. But I mean, you take the good with the bad. It's funny now. All the soft data is coming in better than expected. More consumer confidence data this morning, much better than expectations. Only a couple of months ago, they were all asking Fed Chair Powell, but what about the consumer confidence data? You should be cutting rates. The economy, obviously, we're in a recession and whatever. And said, no, well, let's wait for the hard data. And sure enough, the hard data has remained strong, and the soft data has finally started to catch up again. So, not saying that's going to change, right? I mean, at some point, there's going to be impacts from tariffs, right? It's like it's going to happen, and when it happens, it's going to be like alarm bells everywhere. You're gonna have the "told me so" crowd. You're gonna have the people who've been bearish since April, saying we're in a recession, saying "told you so." Like it's going to happen, whether it's a little bit, or it's a big blip, or what have you. But to me, I think the thing that helps with all this is that like the Fed's kind of like stood pat, right? Because if they had been aggressive cutting rates the last couple months, and then inflation comes in higher than expected, people would think, hey, is it because they're cutting rates, or have they been too aggressive? They don't have their tools at their disposal. So we'll see how things all play out here. I put this chart up here, nice chart from Market Watch around the volatility in the coming days. I think the implied move, I have to go check. I think it's close to 1% tomorrow. And the last Fed meeting was almost like you didn't even know that there was a Fed meeting. All right. Also of note, yields getting destroyed today. I mean, well, TLT is getting bid, which means when TLT is up, yields are down. So good sign there. Just unfortunately, it's like if the case was that yields going down would be good for small caps. I mean, IWM again is underperforming. It's down 0.5% here. So riddle me that, right? Mind-boggling. We're not going to try and to figure that out. Is the stronger U.S. dollar the reason, or the weaker U.S. dollar? It seems there's not much in the way of correlation. So, all right, so that's kind of like the overall market there. So we'll see what happens here tomorrow. And then after the close today, we have Visa. There's a couple other names, but that's the major name, and then tomorrow, obviously, the big names. All right, so now just frustrating morning, right? So, I had the trade desk and the Roku spec calls I got yesterday to play for their earnings, premium build for Roku and TTD for this week, and then maybe some sympathy to moves with Roku. Uh, Looked great yesterday, and then this morning, TTD actually was flat, went to the green, and then just reversed course. It was getting destroyed all the way down under 84 for a little while. It's sitting here, what is it, back over almost, well, 84.50. I mean, I don't see much in the way of news. And Spotify, which I knew reported, but I just, I didn't think there would be much read through in regards to sub ads or that the advertising business or any of that stuff. I didn't think there'd be a read through. And you see, not only TTD, but Roku got hit after the open, Reddit, some of these ad space. And then, on the flip side, Netflix wasn't getting impacted. So I really, I can't name one little catalyst. And I mean, Netflix is off a couple bucks here, but it actually bounced almost into the green earlier. So just frustrating, right? So, I'm kind of stuck with the TTDs this week. I mean, we saw what happened 2 weeks ago with the spec lotto TTD calls turned into some 1,000+% gainers. Not saying deja vu here. Of course I would love it, but if anything, maybe towards the end of the week, we'll see what happens with Reddit reports on Thursday, Roku. If those can get some strong results, maybe that'll set up for uh, some calls into their earnings the following week. And then with Roku, I'm kind of stuck, right? So I went and got the further strikes, which is good in a way because the premium holds up a little better. But on the bad side, it's just now it's like I'll probably just hold those into earnings, pending any crazy swings tomorrow and Thursday. So that's the disappointing thing. And then once the market started showing signs of duplicating what it did yesterday, once it started breaking 636 or so, I said I'm going to get some hedge puts. So first, I had some names on the list this morning: AMD, Broadcom, ServiceNow, but ServiceNow too expensive. Then I was looking at the Broadcom; they seem somewhat expensive, like the 282s, 280s, 277.50s. And then you have to not only have to look at that, you have to look at the strikes. Say, hey, are these going to get? If it does break, look at the chart. So I went with the AMD strikes, and not because I don't think AMD, is a decent story. I mean, back in April, I was talking about AMD being, this the stepchild of NVIDIA. It's like the forgotten stepchild when it was $80, $90, and I tried to play it was 100, 110, and it just never panned out. So I kind of said, okay, it's on my do not trade list for a while, and sure enough, finally taken off all the way up to 182 today. But it's one of those names that could be volatile, especially if the market has some weakness or we have a pull. So the 16, do I have the 162.50s? They were actually just flat. Are they back to green? So I got the 162.50s. It's kind of like a hedge, right? So when I talk hedges, of course I want them to be closed profitable, right? So that's one side of the trade. But the other side of the trade is to hold it so that I can be maybe a little aggressive on the call sign on a bounce or things like that. So when I put hedge, that's kind of what it means. It doesn't mean I'm gonna hold it to zero and that it served its purpose. Yeah, it kind of serves a purpose if it goes to zero and I'm still able to figure out a way to profit off it, right? Which would be buying some calls on the dip or what have you. But on the flip side, if we get some kind of crazy sell-off, then I'm protected from the sell-off, and those will, inexpensive calls right now. So some of these names that have rallied, the Broadcoms, the AMDs, even the NVIDIAs, the premiums are kind of not too elevated on the put side. So it's like right now is like I would call it the perfect environment to be adding puts. But like, if you wait till an overnight and we're down 0.5% or 1%, and then we get some gap downs, then the premiums are just they're gonna explode. So back in the day, back in April and May, if you're trying to get some inexpensive puts on AMD that were 5% out of the money or 7% out of the money with 4 days left to expiration, you're paying a heck of a lot more than 25 cents. So that's kind of like the rationale when I got these put hedges this morning. And then as they're starting to bounce, I'm like, I'm still going to hold these because even though the market's open, it's bouncing, whatever, I still think there's a possibility there's some volatility tomorrow. So SPY's hitting lows right now as I'm talking. I should probably stop talking, but 635, 634.55. That was Thursday's lows. The next low is like 633.99, which was Wednesday. I think it was Wednesday's low. And then after that, then I get some worries here on the SPY. So hopefully find some bit into the afternoon, into the close like yesterday. All right, so that's kind of the thought process there on why I got the AMD put hedges. And then I was looking at AMD and I'm like, Broadcoms look interesting on 280. I was actually looking at 277.50s at first. Then it bounced for a second. And I went and got the 280s, and those were in the red earlier. I even pull those up. We're almost a double now in the AMDs. So yeah, they're still in the red. So the thing with Broadcom, like 3%, when it has down days, it can be down 4, 5, 6, 7%, and for no catalyst, no reason, no what have you. So that was kind of the thought process there. But then on the flip side, like I still think there's opportunities. And you look at Joby today, stubborn, right? And I think I posted in the chat room earlier around its performance. But if you look at it's still up 62% month to date, right? Since the start of June, it's up almost 120%, and year to date, it's up 110%. So pretty remarkable stuff. And typically when you have a name that's not generating revenue, lots of speculation, worries about, hey, maybe they're not going to get to permits, things could get pushed back. You just don't, there's no certainty that Joby is going to derive, that it's going to be a revenue generating company in 2026. There's not 100% certainty, right? There's still a lot of risks. And that's why you trade the market, especially these early stage companies. The reason there's premium in there, it's risk, right? It's risk premium. And then when those concerns are alleviated, boom, these names trade higher. And some of these names get de-risked, whether it be permit approvals, things like that. But just surprising to see it still holding here. I said 14.95, the big spot on the downside for Joby. If it does have some weakness on the flip side, I mean, I think it heads over 20. So I'll continue to be patient there. I'm not going to add anything. I'm trying to think of some of the other things I was looking at here. I mean, a line reports tomorrow after the close. I'm just, I'm probably sometimes it's best when I want to be aggressive. I just kind of sit on my hands. It feels much better. Like allows you, you don't get too emotional in trades when you're not in a lot of positions, right? If you're in a lot of call position, very stressful when you have pulls and no protection, right? Um, but most times since April, I mean, obviously that's paid out, but the time it doesn't, it just doesn't make for a good week and what have you. So we'll see how this all plays out here. Again, I don't want to sit here and say I have my bear horns, I call my bear suit on, right? I'm still cautiously optimistic, but it's like I think there's an opportunity at least for a little pull here. And also you had, China and the US finish up their trade negotiations. They say, we're going to set up some more in like 90 days. So this trade tit for tat thing with US and China is going to be like ongoing. So I don't know if that's a good or bad thing. I mean, to me, at least it creates certainty around, hey, they're talking, they're not just slapping 145% tariffs on each other. But to me, if you're a business, it's like how you operate because businesses see Christmas holiday comes. It's not like you go and say in November, okay, I'm going to get all the Christmas decorations from my store to sell to consumers or Amazon or whatever. No, this is done way out. So what does that all look like? And that's the concern. Obviously, people keep saying, oh, well, the tariff's going to show up when car prices or whatever, like GM. I had big arguments discussions in regards to GM, right? So GM eats 1 point whatever $1 billion in tariffs last quarter, and you could say they didn't, right? Because obviously they sell cars. Who pays for the cars? Consumers. Who gave the profits to GM because of the car? Or whatever, the consumers. So who paid the tariffs? Technically speaking, by all intents and purposes, the consumer pays the tariffs. If that's how you look at things, right? I mean, but that's not how. Uh, that's not how I look at it. To me, when the consumer bears the cost of the tariff, that's when GM has a car that's 40 grand, and then they tack another $1,000 on to account for the tariffs. Or, if it's 15%, then it's $600. Or what, or $6,000 or whatever it is. That to me, that's the U.S. consumer eating the tariff, right? So, here's a company, GM last quarter, generated whatever 3 billion in profits, and that's sans the tariff issue, right? So, and then it's so, and then the stock was on Friday was back over its earnings high. So, well, we'll see how this all plays out. You just hope all the situation of tariffs, some gets borne by the exporter, some by the importer. It all shakes out. They don't raise prices too much, and we all move on. But it seems like and I posted an article this morning. Like if you go through, and I've tried to find some archives where I looked at some articles. MarketWatch had some great articles of some fear mongering back in 2014, and like in the midst of some of these market turmoil events, I remember I still had PTSD, but post traumatic trading disorder in 2008, 2009. After that whole fiasco, it's like 2010, and you're still waiting for the market to tumble, right? Because it's like it's in your head. You're like, oh my gosh. And then finally things worked out. Even 2011, you had the Greece and the Eurozone debt crisis and all these different events that have happened. It still sticks with you. And what sticks with you the most are the people screaming fire during that time, like you're in the movie theater, right? They scream fire when all the panic, just, it's just easy because they want clicks and they want. So it makes it tough. I was just thinking like then some of these moves, like the COVID moves, were a little different because you weren't stuck for 6 to 12 months of this volatile selling. It wasn't the great financial crisis, right? You had COVID was a very short time frame, and then when we started bouncing, it was abrupt, right? And similar to what we have with the tariff thing. So I don't think it was enough time to create these disorders. Maybe I don't know. So it just makes it tough. All right, I don't even know what tangent I went on, but that's just kind of like the mentality. It's tough to kind of have your blinders on sometimes because there's so much noise from both sides. And even this morning, I'm reading, and this weekend, even last weekend, all the I put on a watch list this morning, peak fear, peak stock valuations, peak all these different things, and at some point they're right, right? So last but not least is Visa, right? And I always look at Visa with a negative bias, and if I do that, then I can't make an objective decision on trading it, right? I mean, I can't look at Visa and be bullish. That's just how I am because I think at some point the business gets severely disrupted. But I've had this rationale and analysis since gosh knows how long. But I was looking at 235s were like 50 cents, and now, yeah, 74 by 84, up 35%. But that's saying you don't close them all right now, or you close some out, 3/4 of it to cover the cost and ride the rest. So I'll just watch with popcorn. So if anybody's in those, that's what I'd be getting. The 335 puts probably. But I would have got them this morning or yesterday and then locks them in to cover costs and ride the rest. Um, but Visa is going to be a good proxy to hear about what's going on with the consumer, right? I mean, that's they do all the transact. They're going to have all that line of sight. All right, sorry about going on a tangent there. Hopefully tomorrow we have a rock and roll day. Fed at 2, GDP data, and let's have a great day. Rock and roll.